Well, hoping and wishing are not the ways to retire.
And welcome into the program. This is Protect and Grow Chicagoland Retirement with Chicagoland's certified financial planning professional, Tim Stearns, CFP. Today, talking about the state of the economy and making the case why right now is an excellent time to plan and prepare for your financial future. Tim, we always appreciate the guidance, the insight, the perspective that you provide. And I know that you plan each and every day for many people's financial future, for the proactive savers and investors throughout the Chicagoland area that turn to TJ Stearns Inc. and to you wanting the help of a certified financial planning professional to craft, create, mold, and implement those plans. But why right now? Is this really a better time than we have seen before, or maybe better than into the future?
Well, there's no better time than the present, as they say. But what I'm thinking here is this is when we think it's all unicorns and rainbows. The market's done well for years now, right? It came back after 2022, so it's never going to go back down. These are the times that I want people to take pause and realize that when everyone is going north is when the market goes south.
You mean it seems like everything is rainbows and unicorns and is
Yes.
never, it's not that that is the reality of the case. It just feels like the market can do no wrong at this point in time. We haven't seen that kind of volatility here recently.
Well, I've been in this for 31 years, and when consumer sentiment and the wind is at our backs and all that good stuff is coming out is when something rears its ugly head called a bear market. And it gets me nervous. The other day I had a gentleman in here who just retired. He took an early retirement from an insurance company at the age of 59 and a half, right? So he could start taking money out. And he thinks everything's going to be great, but they never really did a plan. His current advisor said that, oh, they'll average him 6% a year. That's not going to happen every year. And he doesn't have any guaranteed income. He'll be taking out more than he should. But my point is this, is that, when everything's going great, we need to take a step back and realize that we need to make sure that we are okay by having a plan and not winging it.
Tim, you often mention that people have investments, have tools, are investing, but don't really have the plan. Is the difference the question of, well, what happens if this goes wrong? Happens if things don't work out the way we expect them to?
Well, hoping and wishing are not the ways to retire. With us, we do the Protect and Grow Blueprint, which is essentially just making sure that we have a dynamic plan that will, the market be darned, it's still going to perform. And that's, huge is to having some guaranteed income that will shore up when the market doesn't perform. And I just think that a lot of baby boomers that we're meeting with, like that gentleman the other day, he's taking a lot more risk than he should be, and he didn't even realize it.
Well, I think that people know that it is important to plan, and yet, Tim, we still put it off. That thought just kind of lingers in the back of our mind, and we kind of ignore it. Why? Why do people sometimes turn away from something that they know they need to do? I think it's more than just simple procrastination. So, as a part of this conversation, we may dig into that a little bit as well. But, ladies and gentlemen, I do want to remind you, if you want to be proactive, if you want to seize the moment and take advantage of all of the advantageous aspects that we have available to us right now, this opportunity to get your plan put together, or even review and revise and update your existing plan, pick up the phone and give Tim Stearns, CFP, a call. 800-640-2256. That's 800-640-2256. 800-640-2256. That's 800-640-2256. Or you can go online to tjstearns.com, tjstearns.com. I think procrastination probably plays into it, right, Tim? But maybe more than that, like people are scared of the process, like it could be painful, or maybe they're worried it's going to be expensive. Can you talk to us about that?
Sure. I mean, I think it's no different. We've said this before than going for your annual checkup to the doctor. No one wants to go do that, and I get all that. But once you're done with it and you've been given a good, clean bill of health things feel pretty good for you. The wind literally is at your back. So what I'm saying to you is that if you go through a whole process with us, which is, it doesn't take that long, but it does take some, it's garbage in, garbage out. We always tell our clients. But if you do it correctly, you're going to sleep better at night. You're going to feel better about your retirement, that you've gotten things shorn up and making sure that, you and your spouse will be okay for a 30, 35-year retirement.
So when you say garbage in, garbage out, Tim, that's not the ideal process,
No,
obviously. What you're saying is it does take some time. Like you're
sure.
going to have to put in some effort, some information, some resources from both sides in order to get a good quality kind of plan and outlook that is even reasonably reliable.
Right. I mean, we need to get numbers from people that are good numbers. We don't want to just have people go, well, I think I spend, or, guessing at it, because really that's going to affect the outcome of making sure that we have the correct blueprint. And I think that a lot of people don't realize what they're spending. And I also will say this, usually one spouse or the other is in charge of the finances, and the other one really doesn't know what's going on. And it's not to their fault. It's just that usually in my family, it was my mom who knew everything. And she continues to this day. After my dad passed, it was seamless, that transition. If it was the other way around, it wouldn't have been so. So what I'm saying is by having that plan that will actually tell you, all right, the market corrected 25%, we're going to be okay because I have guaranteed numbers coming from, let's say, an annuity, or I have money sitting in a money market that I've been earmarked for this. These are the things that we talk people through to make sure that they can get through a rough patch in the market, because I'm seeing a lot of baby boomers come in here with way too much risk. And they're either A, trying to make up for lost time, or they're being greedy. And I get the greedy part, but let's not, be silly with our money at this level, at this stage of the game.
Well, given the current state of the economy, Tim, and many other specific financial factors that you note and we want to outline today, it may make right now the ideal time to design or refine your planning for your financial future, ladies and gentlemen. Kick those preparations into high gear, get a start or to review and update current plans. So let's dive in, Tim. Once again, if somebody wants to get that Protect and Grow written retirement blueprint, they can give you a call, 800-640-2256. That's 800-640-2256. But a litany of reasons why now is a good time. Number one, this strong stock market. Like take advantage and
Right.
take profits when profits are available.
Right. I mean, no one would want to take profits when the market's down, correct? And, yes, we get FOMO, the fear of missing out on something. But my Lord, how much is enough with the market? And I'm seeing a lot of people come in here that just have your rank and file mutual funds. They don't have any stop losses on them. They don't have any hedges. The guy, like I said the other day, he had 71% in stocks and 26% in bonds, which are both nowadays correlated to the market. So all of his money is at risk without any strategic active management on the portfolio. And that would make me very nervous if I were him. And when I pointed that out to him, he was not happy. He knew that something needed to change.
We need a little bit more hands on with the money that we have in the market, right, Tim? I mean, kind of our grandfather's stock market buy and hold and continue holding forever and ever. Not really the way that we're seeing the market or our investments work um, uh, to maximum potential these days.
No, it's not the same. The buy and hold. That's why you see companies like Vanguard and Fidelity actually having active ETFs and that type of thing, where they're buying companies that are active, because they know that too, that the buy and hold people are looking for strategic. That's what we do, strategic investing, where we're trying to, we're not trying to time the market, but we are going to put brakes on it if the market starts to slide, and that's the difference.
Well, again, we are talking with Tim Stearns, CFP. If you've got questions, if you would like to get a Protect and Grow blueprint put together, pick up the phone, give a call, 800-640-2256, 800-640-2256. And Tim, just because we are planning while the market is strong doesn't mean that we have to give up on the benefit of continued market momentum.
No, no, not at all. You can stay in there, but how about putting some hedges out there? Or, one of our portfolios, we write covered calls on top of the underlying stocks. These are things that we do for people to create a hedge that they don't currently have.
And if we are planning while the market is good, while it's advantageous, Tim, that really preemptively may give us more time to weather future downturns.
Exactly. We're looking for the times that are going to be rough that we're getting prepared for. Not unlike a squirrel collecting its nuts, prior to winter, right? And this is a perfect time when the market's at all-time highs, and yet there's a lot of speculation about what's propping it up and what's not. That these are times that we should probably take inventory of what we currently have and figure out exactly what our plan of attack is going to be if the market retreats.
And Tim, capturing gains in the market when gains are available, that's not market timing. That's
No.
taking advantage of the time where we are now.
Right. And that's also where you're, reallocating, balancing out what you currently have. We've seen so many portfolios come in here with someone who's over the age of 60 and they've got 90% of their money at risk in the stock market. And it's because the stock market has eaten up where the bonds used to be. And, bonds haven't performed as well. So what do you do then? Well, you need to rebalance at the very least. But you also need to look at what did it do in 2022? Are we going to be okay if the market corrects 20%? In most cases, not so much.
Well, strong market conditions does offer the opportunity, an opportune moment to save and invest more efficiently and effectively. Planning for retirement, Tim, we've talked about it numerous times, much easier, much higher rate of success during times when the market highs help. That helps set the foundation for that long-term financial success and stability. So just one reason, but maybe a big reason why now is a fantastic time to not procrastinate and really to put that plan together or review, evaluate, revise current plans. And again, Tim Stearns, CFP, offers you another reason and motivation is that you can get that Protect and Grow written retirement blueprint put together with the help of a certified financial planning professional, no cost, no obligation. So pick up the phone, give a call, get that process and that conversation started. 800-640-2256, 800-640-2256. And Tim, this next one is another opportunity that we have available to us currently. Hopefully, this is something that sticks around, but there's no guarantee. We can talk about these low tax rates forever. And so that makes now an opportune moment to plan.
So let's go through this. We are looking at low income tax rates, the lowest they've been since the early 1980s, and before that was the 1920s. So, and we have a tax bill that's supposed to set to expire at the end of this year. What am I talking to my clients about? Well, we have the opportunity to do some Roth conversions at these artificially low income tax rates. That's one of the things that we talk about all the time with our clients. I'm hoping that it'll get extended, but there is a large deficit looming. So we'll have to see how that goes. But right now, I can tell you what the tax rates are, and now is an opportune time to be doing those conversions.
Now, we don't know what they'll be forever. We do have that large debt and an annual spending deficit. And at some point in time, Tim, retirement is sometimes 30 or more years. There's
Oh,
no
yeah.
guarantee what the tax code and the rates and the brackets are 5, 10, 15, 25 years into the future. But at some point in time, we have to think that the government's going to have to do something about the fact that we spent $1 trillion last year, Tim, $1 trillion just on interest on this debt. And then we've still got the impacts of Social Security, Medicare, Medicaid, defense
Yep.
spending, and all of the other
Right.
projects that Congress likes to spend money on. So at some point in time, there's only so many places that you can solve this issue. You can't cut non-discretionary spending. Congress is probably going to keep spending. So where's the one inflection point in this triangle is tax revenue is going to have to expand at some point in time. I have to think.
Well, if you look at it, how do you get out of a deficit? If you're the government, you cut spending, which they're not going to do.
Not likely.
But yeah, their history says so. And then the other thing is to increase tax rates. So if I can get artificially low tax rates for this year, plus maybe another 4 to 5 years, that would be great. But right now, this minute, I know that that's something that we should be looking at. And if your advisor out there has not had a talk with you about it, give us a call and we can actually show you our tax reports showing you that if you do Roth conversions, what it can do to your tax bill, for over your lifetime, as well as your beneficiaries.
And you can check out that online retirement tax bill calculator, ladies and gentlemen. You can crunch your own numbers at mvpcfp.com, mvpcfp.com, the online retirement tax bill calculator. But Tim, retirement and retirement accounts are actually specifically impacted by tax and legislative policy. And we need to be cognizant of that, right?
The number one thing that they wanted to do out there, the Congress, they wanted to, make sure that the border was secure. And now their next thing is this tax bill, and I hope they can get it passed. If they do that, that's going to be a win-win for most Americans. I don't know anyone, regardless of party affiliation, wants to pay higher taxes. But if they don't do that, then we need to look at this here, where we can make some concrete inroads on doing some Roth conversion. And that's what we're talking to our clients about because it's very important about your tax bill. Why would you want to pay more?
Yeah. And there are, Tim, different ways that we can save for tax efficiency. These are not like secrets of the ultra wealthy. These are just the conscious decisions that we're making with our money that can make a significant difference and impact on retirement. And that's leveraging current tax rules and rates. Maybe looking at the future, predicting future tax scenarios is even more of a motivation why we need to take advantage of tax bracket strategies today.
Right. And one other thing we haven't really brought up that, if inflation continues to rise, it could push individuals into higher income tax brackets. So these are all things that we're pricing in to our plans that we're doing for people. And that's why, a tax bracket strategy that we've talked to our clients about is income shifting. If you're in a lower tax bracket now, you may want to take advantage of contributing to tax deferred accounts. Conversely, if you're in a higher tax bracket, using a Roth IRA could allow you to pay taxes now at a lower rate rather than waiting for a potentially higher tax rate. So, these are conversations that you should be having with your advisor. If you're not, give us a call because we're running into a lot of baby boomers that have, they have money managers. They don't have financial planners and not a certified financial planning professional like myself that's actually showing them with a CPA. If you do this now, you're going to save on taxes down the road. If you, default to the IRS system, which, they would love, then you're going to pay more. And that's as simple as it gets.
We're talking about why right now is a case for planning. The state of the economy, the state of the market, the state of taxes all make the case for proactive planning now, ladies and gentlemen. And you should jump on that and seize the moment and realize the opportunity. Luck is where opportunity meets preparation. Right. I've heard that saying before, Tim, and we've got to do the preparation in order to appear like we were lucky, but really that we were prepared is the bottom line. And that's what the planning process is all about, ladies and gentlemen. And that Protect and Grow Written Retirement Blueprint allows you to identify some of these opportunities that we're talking about today and see where and how you can effectively take advantage of them. And again, Tim Stearns, another reason why now is the time for planning, puts that Protect and Grow written retirement blueprint together. No cost, no obligation, free of charge for listeners to this program. Pick up the phone and give a call, 800-640-2256, 800-640-2256. Another factor, Tim, these higher interest rates, higher than they have been for quite some time, sticking around a little bit. It's nice for savers and investors to get a decent rate of return on their savings.
Right. And we're seeing people do that with bonds and CDs and that type. But if I'm going into retirement, the way I would look at this is that this is a great time to be locking in, annuity rates. The annuity rates right now are the highest I've seen in my career. So the guaranteed payouts, guaranteed, are the highest I've ever seen. And that's important to take a look, at least to explore that. A lot of people say, no, I don't like annuities and that type of thing. But, your Social Security is an annuity. Let's cut that to the quick there. So what I show people is, well, if the market corrects, your bills will be paid by this guaranteed amount. And you don't have to worry about whether you're going to be able to pay your next utility bill. And those are the things that we're trying to show people that right now, if you are a saver, it's a great time to be buying an annuity.
For retirees looking for a stable stream of dependable, reliable income, Tim, annuities can offer higher payout rates when interest rates are elevated. Why
Yeah.
now is a good time to take a look at them, especially improving real returns and income rates for lower risk investors or looking to make a little bit more out of the conservative side of your portfolio. The growth money can be growth money, but
Sure.
you've got to have balance, right? Something
Right.
non-correlated that you've talked about. And right now we can get that balance and we can get reasonable rates and income payouts.
Right. And then the next thing I would talk about is that, we have this baby boom bell curve, right? Where many boomers are retiring and what most of them are in stocks through their 401ks and such. So you're going to have increased selling pressure on stocks. Right now is the pinnacle of all the baby boomers retiring. So with that comes risk of the market maybe decreasing because more sellers than buyers. It's simple economics.
Mm.
So we're talking to people about having long-term payouts that are guaranteed in annuities that the stock market will never affect it. So those are things that we're seeing, and the potential for market volatility with these large-scale withdrawals. Uh, you know, it's economics. It's going to make the market go down if a lot of people are pulling money out.
Yeah, you're talking about things on the meta scale, 30,000 foot Econ 101 supply and demand, right? As the
Exactly.
baby boomers were all demanding a product, buying into the market, making deposits, the prices would naturally increase, or at least the pressures would be for prices to rise, as we have seen over the last 35, 40 years. But
Right.
Tim, yeah, I remember an example on this from Japan, where Japan hit the peak of their baby boom around 1990.
Yep.
And then for the next like 30 years, the market was down or sideways.
Right.
Not saying that the US is exactly the same as the Japanese economy or market, but if you remember back in like the late 80s, early 90s, Japan was kind of seen as like the model of efficiency and their economy was going to take over the world. And then they hit this baby boom cycle of demographics, which is very similar to the American cycle of the baby boom generation demographics.
Right. So along with that, you have the potential for market volatility that baby boomers don't want to be part of, and therefore there's a long-term slowdown in equity demand. And with that, comes the market retreating. So these are things that it's going to impact, retirement asset allocations. And what happens when the markets start to falter, people get nervous and they get out. And then there's more selling and it's a snowball. I would rather see people in guaranteed income that they're able to outlive these downturns in the market, and that's an annuity.
Yeah, and you're mentioning the pressures on the market, but Tim, Social Security potentially equally pressured because of the wave of
Right.
retiring baby boomers. I know that we've heard and talked about this great wealth transfer
Right.
that could also be impacted, right? There's so many things, and we don't know what the future holds, Tim. That's why we've got to plan today and plan when we see advantageous opportunities to take advantage of them right now for the reasons we've mentioned and more, but at least the stock market, the tax environment, and the interest rate environment all tell us that now is as good a time as any to get those plans put together.
Right. And no time like the present, like we said at the beginning of the show. And that's why we're making sure that people, if they want to, give us a call, if they have over $1 million in assets, we will actually sit down with them and go through what a plan would look like. And that's so important for them to take to see that.
Well, bottom line, you must have a plan to get your financial life in order to make the most of the progress that you have made to get the most progress into the future possible. Now is an advantageous moment in life and in our economic conditions for many people to do more effective planning, an opportunity that should not be overlooked due to all of the reasons that we've mentioned on today's program and more. But maybe the biggest one is Tim Stearns and the team from TJ Stearns Inc. They help savers and investors better determine their outcome by putting the written Protect and Grow blueprint together. So if you want to learn how to retire, pay less in taxes, optimize Social Security, take advantage of an advantageous market or low tax rates or higher interest rates, pick up the phone, get your Protect and Grow plan today by calling 800-640-2256. That's 800-640-2256. 800-640-2256. Tim, always a pleasure having you on the program, always informative, and thank you for reminding us of the importance of planning and why now is as good a time as we're going to get to do that planning.
Thanks for having me, Peter.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Investment advisory services offered through Cornerstone Securities, LLC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.